Well, some new unemployment numbers just out this morning. The U.S. Labor Department says jobless claims climbed by 23,000 to 230,000 last week. That's 30,000 more than expected. It's the highest level since mid-November. Still low by historic standards looking at the rest of the pandemic. Now, this comes as inflation has jumped to its fastest pace in nearly 40 years. New research out showing it climbed to 7% last year, putting an increase on household expenses, eating into wage gains, and stretching your wallet pretty thin.
AM Extra wants to know, why is this happening now? So joining us live to explain is Professor of Economics at Portland State University, Hiro Ito. Good morning.
Good morning. Thank you very much for having me.
Yeah, thanks for being here. A lot of people want to know, why is this inflation rate going up so quickly now? And why is it at a 40-year high?
Okay. Well, when economists hear higher inflation, then we tend to think that that is because the demand for service and goods is not being met by the supply of those things. That pushes up the price level. So what does that mean? So what that means is that, let's say, if many people are willing to buy pieces of furniture, say sofa, but the number of units of sofas is being limited, then some people will become willing to pay more to get the piece of sofa or furniture. So what that means is that the demand for goods and services is not being met by the supply of those, and that help bid up the prices. And that's what we are experiencing.
There's been a lot of talk about all these issues in the supply chain, and we've seen that impact going on for several months now. Is that the biggest factor, or are there other things at play here too in terms of supply and demand?
Well, as I said, the supply of the economy is not big enough to meet the demand for goods and services. And the biggest problem we have in the supply sector is labor shortage. Many companies and industries are having a hard time to hire people. So that really disrupts the supply chains because production and shipments tend to be slow. So that is the biggest problem we are experiencing at this moment.
Well, we know that as consumers, we are paying more for many items these days. Do you expect this to continue in the long term, or is there, light at the end of this tunnel?
Okay. Well, I tend to think that it's going to take place for a longer term. The reason why is because the disruption in the supply sector seems to be quite severe, and that is also being affected by the pandemic as well. So some people feel very uncomfortable about working in an environment where they have to do some human interactions, or some people are just simply sick to work. So those people cannot go to work, and that can help continue to disrupt the supply sector. So as long as the supply sector is not being fixed, this issue will have to continue.
There's been a lot of talk about interest rates raising back up again this year. Federal Reserve Chair Jerome Powell was talking about it this week. Are there things that federal regulators can do to try and control the inflation right now?
Well, in this kind of situation where we are experiencing higher inflation, the Fed, or the Federal Reserve Board, which is our central bank, what they can do is to raise the interest rate so that the cost of borrowing from banks will be higher. And once the cost of borrowing from banks becomes higher, then people would buy less, companies buy less and make less investment. So the basic point of raising the interest rate is to help the economy calm down. So market participants expect that the Fed will raise the interest rate probably 3 to 4 times over the course of this year.
Wow, really just trying to put a damper on things. Sounds like that might be where we're headed.
Yeah, definitely so. Hiro Ito, thank you for joining us and helping us navigate through this time on AM Extra this morning.
Thank you very much.
And you can find an explainer on everything we discussed right now, along with some other economic news on KOIN.com.